Happy Monday, everyone. Welcome back to our weekly macro update. Welcome back, Tim. Nice to have you. Today is going to be a very, very important day, and we look forward for your commentary, as always.
Yes. Good morning, ladies and gentlemen. I am glad you tuned in today. Kind of historical. We have much to cover, but there's a problem. I had a little bit of an appointment in the morning, but I slept over because I was awake the whole night because of markets and all this stuff. But I do my best to give you a little bit of insight what is going on. Today we will focus about the stuff that actually causes the price movements that you are seeing today. Also stuff that behaves differently, like in the last weeks or days when we have seen gap downs, risk off, right? And also a few advices how to deal a little bit with this situation, because I can imagine it's kind of new to some of you, right? If you are in the markets like 3 years, if you have not traded during COVID, which is kind of comparable to the action that you see, at least since last week, last 2 weeks, something like that. And and most important, I have my Jerome Powell sweater on today. It maybe bring us luck the next weeks. We will see. All right, let's start with the usual schedule. Last week, I just put a SPX chart in here with a screenshot that I took during the first seconds of the Donald Trump press conference, and it was pretty telling. The guy on the right here, imagine you have OGM calls in SPX, and this is the first sign they never go ITM, right? So he maybe will drop a bomb in the press conference 10 minutes later. He did. The tariffs, it was kind of a surprise if you have read research, all the stuff, if you have some subscriptions everywhere on the internet, you maybe have read all the stuff like 10% tariffs for all countries would be a good thing. 20-25% is some sort of a risk off, but what he presented us afterwards with big tariffs on China, 25% of the EU, for example, this caught some people off sides, I would say. And that's why you can say one pick is worth 1,000 words from the last week. Thursday gap down, Friday gap down in SPX. We lost a tremendous amount in market value, market cap, because we nearly went down 11% in 2 days. Of course, these drops are pretty big, right? On the other hand, if the market gets caught on the wrong foot, it's kind of logical that something has to happen. People have to de-risk. People have to get out of nearly every sector into the market, because the announcement from the tariff stuff from the Trump administration, was kind of new and unexpected. Apart from that, FX volatility, that's a chart, FX futures, they are a little bit telling. The left side of the chart started with the press conference from Thursday, from so-called Liberation Day. Wednesday after close. Futures still trading, FX futures, so they went pretty crazy during this time. The outcome, if we look at Friday close, you can see, kind of safe haven bits in FX, which is most of the time the Swiss franc, the Japanese yen. Then you have dollar weakness with the dollar down since the announcement from Donald Trump. This usually is in favor for the European FX markets, the Great British Pound and the European Euro, of course. On the other hand, emerging markets, they are getting sold across the board because you have the risk of scenario in equities, this time not just in the US, across the globe, right? And then stuff like the 6Z, the 6L, 6A, they will suffer, of course. The 6A, the Aussie dollar, is always watched compared to the yen as risk on and risk off FX pair. It's kind of a classic pair that you always can watch for this stuff most of the time. But the 6L and 6Z, which is the Brazilian real and the South African rand, emerging market FX, also no bid over there. People are rushing into the safe havens. And if we look at today, this market looks a little bit more stable. Surprisingly, the kind of big gap down in equities global during the night. Wait a minute, I have to fetch my chart a little bit. Yeah, it doesn't have that much of an impact, right? So you can see markets always arguing and trade a little bit different, and correlations can also switch. Today, the yen is kind of unchanged a little bit, and the Australian dollar is a little bit on the bid. Usually, I would now tell you what can go on over the next week in terms of economic data, but yeah, let's do this later. Okay, inflation data this week, April 10th and April 11th with CPI and PPI. Of course, as every week, labor market data, but shortcut here, it doesn't matter that much, right? On the right-hand side, there's a little, guide how to play these markets. I read it in the morning on the Bloomberg app, and it's actually pretty true, right? So these markets rarely end until official response of some kind. Of course, tariff related, and those statements have to come from the Trump administration or other countries may be ready to negotiate to eliminate those tariffs, and that the markets can come down a little bit and don't open every day with a gap down. Liquidity is a pretty big problem. It's the only thing that matters, as Bloomberg said here. It's other stuff matters as well, but it's pretty important because higher volatility usually means also lower liquidity. And if you have to get out of your positions, and if the positions are pretty big and liquidity is bad, you may lose even more money, right? Because your fill on whatever asset, stock, or commodities is maybe worse because of the liquidity conditions, and those trades are hurting even more. So liquidity is a big problem in this market. Screen prices are not be trusted. Of course, you can trust those prices because they are official from the stock market, but the main topic from this point is levels are meaningless. I mean, it's kind of right? But if you are, I don't know how you trade, but if you are doing like technical analysis, and there is a bottom only 4-hour chart which hold 3 or 4 times during times of elevated volatility and lower liquidity, it might get sold finally, right? So be a little bit more aware that this market may move a little bit different from stuff that you have witnessed from the past. And what I mentioned in the beginning, data releases are to be ignored. This week, inflation data is the least of the problem for the US market, right? Also labor data. Of course, it can ignite a little bit of a move, but we have way more sinister problems, which is, of course, risk off in equities. Also risk off, around the whole globe. Then oil get also pretty hit during the announcement from Donald Trump. If you just open a chart in CL with the announcement from Wednesday in the evening, we have traded in the 71 quarter, $72. We are now at 60, right? That's 3 days, $12 down. That's huge. That's enormous. And please keep in mind, energy futures, they don't have the classical limit down like equity futures. Most of the energy futures have a measurement of a rolling period of limit down, which is in 1 hour 10%. Energy markets are getting closed, but as long as every 1 hour candle is 9.99% big, they won't shut down the market. And yeah, the oil market can drop, I don't know, even more on the day, right? That's a little bit different over there. On top of that, Saudi Arabia has also cut the price target for oil due to growth concerns, which is also correlated to the tariff war that is ongoing, and oil volatility pretty high as well. And yeah, kind of trades a little bit like equity futures, also pretty thin. Liquidity is vanishing a little bit. So if you are trading energy, especially oil, maybe also size a little bit down, pencil in wider stops. So this market has changed as well a little bit. And of course, where we are trading now in the actual CL contract, which is the K1, 60.23, 60, huge level, not seen since over a year, I guess. Yeah, over a year. And yeah, it's like on a cliff, has to hold. So be careful around there. What's a little bit different from the other days where we have opened gap down is the bond market, right? This morning, it gained some bits during the overnight session, but then it got sold like 4 in the morning Eastern time. Also like 2 hours after the Globex open. It's a little bit different than usually you would say equities down, bonds, also safe haven asset, they got in bid. We don't seeing this today. This is a little bit of a problem. I know bonds have also limited upside due to basic mathematical stuff, right? If you're trading bonds, you maybe know what drivers the different tenors have. Like the short tenors have usually policy and rate cut expectations as drivers, while the long end suffers more from inflation and the growth outlook. But I can imagine if bond yields are going up again, which they do, if the bond prices are going down, this can be also an extra problem for equities, because equities down, bonds up is kind of normal. Equities down and bonds down is a bit of a problem. Stuff begins to correlate more, and also it narrows the assets where you can hide. All right. Which brings us to gold. Gold was pretty interesting. The chart shows the 2nd of April, which is always the timeline I'm watching because the tariffs have been announced over there. So it's a good timestamp for the market to gauge the last moves. And as you can see, 2 days after it, we have seen pretty fierce down moves. The rumor has it, it's maybe related to liquidations because people need more margin. Imagine not just having an equity portfolio, but you have also gold in your portfolio. Your equities are going down, or you maybe need more money to buy extra protection in terms of SPX puts, or you want to participate in volatility with a position in VIX. Options are already pretty high because VIX was high, and so you need more money. And if you have a gold trade that has performed pretty good, you may have to liquidate this stuff, right? So that's maybe the reason why the last 2 days have seen this much of a down move. Today, We have opened pretty in our 1-day expected range, which is roughly from 3,010 up to 3,070. The lows and the highs are like give or take $10 or $15 below. That's usually a range where, yeah, we can spend in theory the whole day, right? Do we have a chart over here? No, that's next. Of course, the 3,000 is a pretty big level. That's something I would watch from the technical side. It's also the topping from like the last part of February. We then spiked over 3,000, 13th of March, and we tested it in the morning. So I want to see what happens over there, because I can imagine if we have more and more further downside in equities, you might see those liquidations in gold again. On the other side, gold can also turn a little bit more into the safe haven character if bonds and stocks are going a little bit more down. And yeah, as you can already see, I kind of try to interpret different markets to do my trades over here. What I only can do here for you, because I don't know how you trade and what your timeframes are, highlighting some price levels that you may have to watch, so you don't have to fumble around in the middle and getting caught off by weird price movements. Gold volatility is already pretty high. The GV set was around 22. The close of Friday. I have to see how it opens today. And yeah, the fundamental stuff for gold, at least from my view, is still ongoing, with the central banks buying and gold demand still high. Keep in mind the gold price had a tremendous up run the last weeks and last months. The charts over here on the left-hand lower side, multi-expirations for GC options. We have the 7th of April expiration and the 8th, which are today and tomorrow. As you can see, around 3,000. There's a lot of gamma, a lot of stuff that we have to deal with. And that's the reason why I watching those levels way below. I mean, $3,000 is $45 below spot where we're trading now. We can easily reach this during the New York Open session, or New York session, sorry, and about the whole day. And overall expirations, the upside looks still intact in terms of gamma and open interest. And gold has to make a stand now where it wanna trades, right? But keep in mind, those liquidations due to bigger margin requirements are maybe a real thing. And yeah, as always, stick with the momentum, stick with the trend. But in my opinion, it's a good sign that gold is green on the day where the other stuff, equities are down, oil is down, and the bonds are turning red slowly. It's maybe the next safe haven bit. Equities today. Those are different ETFs. QQQs. We have the EWJ, which is a European ETF. There's also JINN, which is a leveraged Chinese ETF. As you can see, during the pre-market session, they all went down, right? During the night, we had trading halts in Taiwan, Thailand, and Japan. Equity indices have hit their limit down during the day, trading halt. We didn't have seen this in Europe so far, and we didn't have seen this in the US so far. If I remember right, the Russell was down like 7% in the morning, but they don't do a trading halt then in the morning, right? It's a little bit different than during the, let's call it cash session, where we have the circuit breakers like 5, 10, 20%. Maybe visit the CME website today if you are trading intraday and you aren't aware of those price levels where the circuit breakers are coming in. It's not really funny to be in a trade in an equity future during a trading halt. So just a little bit of a hint here. Do your research and maybe search for the levels. CME website has it. Back to the equities globally. That's global risk off then, of course. Usually this stuff can also snap back to a certain amount, right? Because overnight ES 4% down is kind of big, but don't catch the bottom here. That's maybe the most important announcement that we can make. Can be very, very dangerous to step in here if you don't have some really good insight or some really good research done why those trends might change. Let's look a little bit over volatility. That's then the last topic for today. So those are the correlation indices on the upper pane, 1 month and 3 month implied vol for SPX compared to a basket of stocks in the SPX. And if those correlations are going up, usually we have some sort of event or at least elevated volatility. And as you can see, we are already trading higher than during the August yen Mageddon, where the Bank of Japan raised the rates surprisingly a little bit higher. We're nearly trading around March 23, where we had the Silicon Valley Bank bailout, the fail due to the bonds that they have holding due to the unrealized losses in their books. But compared to COVID, which was also some sort of globally event, right, that has mattered for the whole world, we still, kind of below down there. Usually it's not really that comparable because all those drivers behind here are a little bit different. But just keep in mind, a global sell-off moving in prices that you're seeing today is not like solved with a finger snap, right? It's not like, okay, that's the low, let's buy everything and everything goes up. The uncertainty in the market and also the volatility, this stuff has to come down. This stuff has to be priced out again. Markets have to get calm a little bit more. And that's the reason why a little bit of a VIX on the last slide here. The momentum was pretty high from our momentum model from MenthorQ. That's the left upper pane chart with the Thursday and Friday, which has seen some great volatility expansion. Today, I think VIX has opened in the 60s, if I remember right. Yes, it gets sold now to 45. Don't be a fool and think 60 is something high and it's too high, quote unquote, and you have to short this. Don't do it. Don't read the price in a VIX trade out of a chart. It doesn't work like that. Okay, so the VIX chart you are seeing is not born out of bid, ask, supply, demand. It's basically a mathematical formula based on options pricing on the SPX. Right, so keep this in mind. Trading volatility needs pretty strong framework for it. It can be really expensive if you are doing a mistake over here. The volatility smile for VIX, the right chart, as we can see, below 40 had seen big volatility, implied volatility. If you're watching the green curve, which is the Friday curve, after that, it goes a little bit down. You can read this like people aren't maybe penciling in volatility in terms of VIX above 40. What is this? 45, 50. The fact we have opened higher a little bit is some sort of surprise, I would say. And the NetGex multi-explanations chart for VIX on the left side lower shows you that we are trading already above this big chunk of gamma exposure here. And again, the close in VIX from Friday was 44. And I still don't buy the fact that we have a lot of people selling like the 50s in VIX, right? The risk for this gap up is way too high. Also, the 50 strike to sell it is, from my view, too narrow to the spot price of VIX from Friday, which was around 45, 30. If we are talking about near-term volatility, it's maybe different if you are trading way more out volatility. But from my view, there's so much uncertainty in the market and so much stuff can happen that we can easily snap higher in volatility. The futures in volatility is also kind of interesting. Trading at 35.80 and 31.15. So this expiration and the next one's expiration. So there's already a big gap, right, between futures and the VIX, more than 13 points. So means if you want to bank in a VIX short term, this move has to come pretty fast, right? Because the spread between VIX and VIX futures is already pretty big. And last but not least, volatility should be kind of observed by you guys. Also is the right word. If you want to take exposure in equities again, you should watch stuff like spot vol correlation, like how's the SPX responding to the VIX, right? Do we have both green on the day, and how much green? Or do we have a red SPX and a red VIX, right? Not today. VIX is still up like 4 points from Friday close. Also the volatility, which you can always look at the VVIX. This stuff has also to come down, that you maybe see lower volatility in the pricing of VIX options, which then shows you supply and demand, right, for those options. Is this coming down or is this going further up? What I always do, I also watch volatility from other assets, like bond volatility with the MOVE index, right? If this is spiking up again, I may lean to the view that bonds see further downside, which wouldn't be that great in the current environment, to be honest. Of course, positioning, if you have excess, like we have here, you can also get a little bit more color on this. And if you have still had exposure in those markets, if it's a short, first of all, congratulations, you should banked in pretty big. Active managing this stuff, because with markets this bombed out and this thin, some positive announcement, be it something like the European Union is ready to negotiate with the US in terms of tariffs, you can have those sharp snapback rallies, right? In bear markets, which we are having now slowly, those relief rallies, they can always rip your face off. They can be pretty violent because positionings are kind of dictating how the market is moving. And if most of the people are short and sitting in those shorts, they have a problem if spot prices are changing a little bit. All right. Kind of short one today, but we're also running a little bit short in time. So,
yeah, I think one thing, Tim, that is going to be very important is next week we're going to have the VIX expiration and OPEX. And there's a lot of gamma expiring next week. I think we wrote a note yesterday or on Twitter. So for those who are following us, please stay tuned. And then also we want to let you guys know that we're going to be providing free gamma levels this week to help you guys stay ahead of the curve. So if you want to receive the email with the data, we're going to send it at 10 o'clock with the opening snapshot. So just create a free account, sign up for our mailing list, and you'll get the email directly in your inbox for this week. So I think we want to make sure you guys have all the tools to be able to go on this week and learn how to use the data.
Yeah, that's pretty good. The more you have of color in this markets, the more it can help you maybe all the time. But key should be here, be patient. Don't do stupid stuff, right? If you're a day trader, size down a little bit. Position management is really, really important. What was your SL like 2 months ago? 20 ticks in ES is now nothing, right? You can easily get wiped out. So keep this in mind and everything should be good.
Sounds good. Thank you guys, and see you again, team, next week, and see you guys in the room. Have a great Monday.
Yes, thank you everyone, and let's have a good Monday, I hope.